Hi, this is Lara from Elliott Wave Forex with your free S&P analysis for the New York trading session dated Wednesday, 28th of July. A really quick look at an historical chart. I'm labelling this whole recent movement from the end of 99, early 2000 as an expanded flat correction. I have cycle degree wave 5 ending here with a truncation because when I look at this piece of movement here, when I tried to do the subdivision of this wave A at cycle degree, I had a good look at this. And this looks really strongly like a 5-wave structure. It looks like an ending diagonal. So I think it's most likely that wave 5 at cycle degree ended with a truncation. Therefore, A, the length, is calculated from this point to this point. Therefore, wave B is a 106% correction of wave A. Elliott Wave principle by Frost and Preacher tell us that the minimum requirement for the length of wave B is 105% the length of A for an expanded flat. That minimum requirement here is met, therefore I'm going to call it an expanded flat. Another reason why I think wave C is going to end substantially beyond the end of A is we've only had wave 1 and 2, and we're only working on the early stages of primary 3 to the downside within this 5-wave structure for cycle degree wave C. 3's got to end beyond the end of 1, a rule for wave 3. It's going to have to end comfortably below the end of wave 1 to allow enough upwards movement for a 4th wave correction. Then we're going to have one more push down for a 5th wave. So it looks pretty obvious that wave C, in this instance, is going to be significantly longer and end well below the end of A. Again, that's what an expanded flat calls for. That's according to Frost and Preacher anyway. Having a quick look at the weekly chart, another reason why I'm so bearish on the S&P and the Dow and the Euro is wave behaviour. I think wave behaviour is really important. If you took a snapshot of this piece of movement here within primary degree wave 2, you would not be able to tell me what is the obvious trend. Is it up or is it down? You may think you're looking at a small correction within an overall downwards trend. However, if you took a snapshot of this piece of downwards movement, so long as it included one of the impulses, one of these, you would obviously, especially this middle part, you would obviously be able to tell me that the trend is clearly down. Within an impulse, the trend must be obvious and clear. Within this primary degree wave 1, the trend is obviously clearly down. Here, primary 2, the waves are interlaced, blue and red candlesticks, the bars are much shorter, trading in a smaller range. This is obviously corrective wave behaviour. Again, beginning of primary 3, wave behaviour has obviously changed. The bars are longer, there's much more downwards pressure, it's obviously impulsive. So that's another reason why I'm really bearish. That expanded flat structure calls for a long wave C, a lot of downwards movement to come, and wave behaviour is backing that up. Taking you to a daily chart now, where here's our recent movement down. The beginning of primary wave 3, a main wave count with minor wave 1 ending down here, followed by a simple ABC zigzag to the upside for wave 2. My target, 1149.5 for this main wave count, is calculated by looking at C as reaching equality with wave A within this simple zigzag. Pretty common relationship between the two. We'll also see a nice overshoot of this upper Fibonacci 0.618 ratio. We can draw this trend channel now around wave 2 blue, Elliott's technique. A trend line first from the start of A to the end of B, and a parallel copy placed on the high of A may give us guidance to where wave C may come to end around about the upper edge of this parallel channel, or often, commonly, midway in the channel. Most importantly, when we see a full day's bar opening and closing below the lower edge of this parallel channel, we'll have some strong indication that 2 blue is over, and 3 blue at that stage is then underway. When we know where wave 2 blue has indeed ended, then we can calculate a target for wave 3 blue for the midterm to the downside. I won't do that yet because obviously we don't know that 2 blues ended, it's not over yet. Taking you now to the alternate wave count. Main difference between the main and the alternate sees wave 1 at minor degree ending here, followed by an expanded flat, 3-wave structure for A, 3 for B, working on a 5-wave structure up for wave C. One of the reasons I like this is it sees this piece of downwards movement as labelled as a 3-wave structure. I've been a bit lazy with my labelling here. I'm just going to leave A, B and C here. It's probably a combination. It's a corrective structure. It's got a corrective wave count most comfortably. It's possible, however, to see it either way. I can have a labelling that is impulsive, that meets all the rules and many guidelines, with a couple of small problems. but no rules are broken. It's most comfortably, however, seen as corrective, and that's the most comfortable wave count for this piece of movement. Most importantly, this alternate wave count sees this upwards movement for wave C pink as unfolding in a 5-wave structure. Remember, the main sees an ABC zigzag. This one sees a 1, 2, 3, 4, 5 wave impulse to the upside. It has to be an impulse. It's not going to be a diagonal because this wave 1 has broken down into 5. A diagonal requires it to break down into a zigzag. So the structure of this upwards movement, when it's all over and done, hopefully it's going to be pretty clear and pretty obvious, and that will determine which of these 2 wave counts is correct. When we know the top of 2, we can then calculate the likely downwards target for 3. Taking you now to an hourly count where this green 1 and green 2 is this green 1 and green 2, and we can draw a nice parallel channel around this upwards movement now. Elliott's technique, first a trend line from 1 to 3 and a parallel copy placed on 4 may give us an indication to where wave 5 may end up. It may come somewhere close to the upper green trend line, or again often midway in the trend channel. Thereafter, when we see some movement below the lower edge of this channel, we'll have our first indication that our upwards trend is over, because this last push to the upside is our final push. A target to the upside for green wave 5 to reach equality with green wave 1 takes the S&P up to 1139.4. This wave 3 green was just 2.5 points short of 1.618, the length of 1, so we can reasonably expect 1 and 5 to reach equality. That target 1139.4 is just really close to this target I've also got on the daily chart for this wave count, the main wave count. So if it ends up in that target zone, 1139.4 to 1149.5, and it has a 3-wave structure, I'm going to ditch the alternate and stick with this one alone. If it ends a little bit higher and it's got a 5-wave structure, we'll stick with the alternate wave count. So I expect wave 4 green's probably over here. I thought it was probably likely to have ended down here. At the 4th wave, it's actually of 2 lesser degrees. However, that's not correct. It did move a little bit further down. The wave count's not invalidated. 4 has not moved into 1, and now the length of this wave 4 has quite a nice relationship to this wave 3. So this is looking pretty good now. Some nice relationships in this downward sideways movement here. Wave B is a 76% correction of A, and wave C is just 3.9 points short of 1.618, the length of A, a nice Fibonacci relationship there. Within this 5-wave structure for C down, wave 3 red is 1.1 points more than 1.618, the length of this wave 1, and wave 5 red is just 0.2 points short of equality with wave 3. So it's a really nice Fibonacci relationship in this 5-wave structure here. A nice 5-wave structure should be over here. We should be moving back to the upside now for that 5th wave towards that little target zone I have to the upside for you. So that's all for me with your S&P analysis today. I hope everyone's having a fabulous day.